Hey, what's going on, guys? My name is Dr. Boyce Watkins, and you probably noticed that your stocks just went straight to hell. This was a day of a pretty bad day for investors. I know your stocks probably hit the bricks pretty bad, and I'm going to explain why in terms of what's going on. And it has to do with the Fed Chairman Jerome Powell. Jerome Powell just made some statements on inflation and the stock market that caused the markets to pretty much reject his statement. And I'm going to give you the nuance of what's going on. We're going to talk about it right now on the Black Financial Channel. So get comfortable, and we're going to get started right now. Hey, what's going on, guys? My name is Dr. Boyce Watkins. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. Now, I'm actually on the move right now, but I wanted to talk to you guys about something that I'm sure has my email inbox filled up, completely filled up, because right now the stock market's in a pretty interesting free fall. It's dropped over 400 points today, which is a very big deal. And you probably got hammered if you own tech stocks. A lot of your tech stocks, the NASDAQ, was pretty much body slammed in really the overall exchange today. Just one of those days, one of those tough days, where you're going to lose some money. You win some, you lose some. Sometimes even Patrick Mahomes can't can't get a first down, right? Like you saw in the Super Bowl. So the stock market, which has been very good to you on most days that we talk, wasn't very good to you today. And the question you may ask yourself is, why did the stock market plummet today? Why did the stock market seem to almost crash, or it dropped a lot? I want to say maybe, what is it? Let me see, 300. So 300 points would be about 1%. So about 1.5% to 2%. And this is a continuation of the free fall that's been taking place for the last probably week and a half or so. And all of it came up because of that demon that we talked about this morning, the demon called inflation. Inflation has been kind of the threat to the market. A lot of people have fear that inflationary pressure will emerge as a result of a few factors, namely that the vaccines going out, uh, so people are going to go back to their normal lives. There's a lot of pent up demand from consumers who are looking to go out and spend money, and also the stimulus check, the $1.9 trillion stimulus that the government's sending out right now, that's adding to inflationary concerns. So the big debate right now has to do with whether or not there's something really to be concerned about, or if it's much ado about nothing. Now, first of all, let me ask you this. First of all, if you could hit the thumbs up button, hit the thumbs up, share, subscribe button. We're building Black media here. We really need your help. We believe Black people should own our own media. Also, let me know. Give me a yes in the chat if you can hear me okay. If you can hear me all right, just say yes. That way I know I'm not talking to myself, because sometimes I do that. I know this morning we met on my Twitch channel. My Twitch is Dr. Boyce Watkins, and we were playing Call of Duty and talking about the stock market, and I was answering you guys questions. And then the Twitch feed went out, and I had no idea that it was out, so I was sitting there talking to myself. So please help me avoid my own embarrassment by letting me know that you can hear me okay. Thank you very much. Great. So, being very quick, what's going on in the market right now is that there are two schools of thought on this inflationary issue. There are those who believe that all those factors I mentioned, the stimulus, the the pent up demand of consumers that are going to go out and spend money, and the vaccine, are all going to cause inflationary pressures, meaning just an excessive money supply added to increased demand for consumer goods, right? Which that's what inflation is higher prices. But the big pregnant moment, if you will, like the moment where everybody was sort of like, okay, what's going to happen now, came when Fed Chairman Jerome Powell gave a speech. So Powell goes and he speaks, and when he speaks, people listen. Everybody listens when the chairman of the Federal Reserve speaks, because his words reveal information. Information is what moves stock prices. Information and expectations. Those are pretty much the two things. And really, information and expectations are like siblings. When you get the information, you revise your expectations based on the information you've received, and then you also compare your expectations to the realizations of what actually occurs. That's how stock prices move. We just make it mathematical. So basically, the chairman of the Fed gave a speech, and he basically said, everything's cool. Like, don't trip. It's all good. We're gonna keep on. We're not gonna worry about inflation at all. We're gonna act like inflation's not a big deal. So he's kind of, and some people got worried. They were kind of like, thinking that he might be doing what I do. If you watch me on my Twitch channel, you'll notice that I've been killing zombies on Call of Duty. And the reason I get killed early in the game is because there are times where I think I got it covered. Like I'm like, okay, there's 5 zombies. I'm good. I can kill them all at close range. Next thing you know, I get surrounded and I get trapped. A true story. I get trapped and I can't get out because I underestimated the zombies that were coming. I never get killed by hordes of like 30 zombies. I get killed by small groups of 4 because I see 4 zombies and I'm thinking, oh, I got this. I got this, right? So the chairman of the Fed is basically saying, don't trip. It's all good. Nothing to worry about. Inflation's going to be handled. We got this. We got this. Well, the problem with inflation is that inflation is kind of a tricky beast. You know, inflation, once it gets out, it's kind of hard to control. And a lot of the old school people remember the 1970s where inflation got ridiculous and insane and it couldn't be reeled back in. And this was when Paul Volcker was the chairman of the Fed, if I'm not mistaken, or the Treasury Secretary, one of the two. And so it was really tough, kind of putting that cat back in the bag. And so in this case, though, Powell is basically saying, no, like this is not the 70s. It's not going to go down like that. We're going to be okay. We're not going to restrict the monetary supply. We're going to keep on doing what they call quantitative easing, which is pretty much what you do when the economy goes south. It's like the baby's hungry. I'm going to feed the baby. And somebody says, no, the baby's going to get fat. If you keep feeding the baby, he's going to get too fat. Then he's going to get diabetes and he's going to be overweight. And it's like, and the mother's like, no. The baby still needs to keep getting fed because the baby is not full. Well, if the economy is the baby and Chairman Jerome Powell is the parent of that baby and he's feeding the baby, what does it mean for the baby to get full? Well, in the eyes of the Fed has a couple of major goals. Their main goals are: 1, full employment. We are very, very far from full employment. So the baby's not full in terms of employment. We have about 10 million people that want jobs that can't get them. So the Fed is saying we're going to keep feeding the baby until we get 10 million more jobs for people to take on. What else does it mean for the baby to be full? Or how do you make sure the baby isn't overeating? Well, another measure they use at the Fed is they look at inflation. Their inflationary target is about 2%. So they not only want inflation to be about 2%, not too high, not too low, but they want to also have reason to believe with their many indicators that inflation will remain about 2% or not go too high from that. So when they achieve that goal, that's when they say, okay, good. The baby's full. Now let's put on the brakes. Let's grab the nipple, pull the bottle back, and we're not going to feed the baby anymore. In fact, we're going to put the baby. Maybe the baby's getting a little bit chubby. We'll put the baby on a diet. That's the same as raising interest rates. When the Fed starts to actually go for and do the opposite of quantitative easing, which is to increase interest rates and to reduce money supply, they're slowing the baby down because they feel the economy is getting overheated. So that's the debate. This is the issue that caused your stocks to drop today, is that people didn't believe Jerome Powell. That's the point. People didn't believe him. When he said the baby's not too full, we're going to keep feeding the baby. They were like, no, the baby's getting too fat. The baby's going to get diabetes. Don't keep feeding the baby. So they're basically saying, slow down, slow your roll. Stop putting money into this economy. This economy is going to overheat. You're driving the car too fast. It's going to crash. And the market speaks through prices and dollar bills. So what happened was, right as Jerome Powell was talking, the long-term yield on Treasury bonds started going up. That's a real important indicator to tell you how the market feels about what you just said. So the market didn't like what he said, and the market reacted negatively. That's why you saw bond prices drop, meaning bond yields went up. You also saw stock prices plummet. And tech stocks, if you own any of these small growth companies, if you own a SPAC should be, instead of spelling SPAC, SPAC, SPAC should be spelled FUCKED, because you just got SPAC'd into the ground. They SPAC'd your brains out if you own these SPACs. And these SPACs were something that was heavily leveraged on these small, tiny growth companies that are very sensitive. Their prices are extremely sensitive to changes in interest rates. So as a result of the 10-year Treasury yield going up, the SPACs and the small tech companies and the growth companies got body slammed. The NASDAQ got hammered. So if you own these companies, just know this ain't going to be a good week for you unless you have a long-term view. If you have a long-term view and you believe a little bit of what Jerome Powell said, which he's a smart guy. I actually listen to this guy. I respect him. He says that the increase in inflation is going to be temporary. He said, look, it could happen, but it's not going to be so bad. It's going to be short-lived. It's going to be all good. Yeah, you're going to feel a little bit of heat, but it's going to be all right. And if that's true, then what that means is that you could go in maybe and buy some of these companies cheap. Maybe this is a time to go shopping. If you got a little extra cash and you're ready to make a move, if you can, if you got, if you're blessed to have a little bit of something on the side that you can invest, this might be a good time to make a move. So remember that smart investors make money no matter what. What am I going to do? You might be asking. I got to tell you this because me and Alicia are about to walk in the grocery store, and I don't want to be rude to my baby. But I'm going to buy. I'm going shopping this week, and I'm going shopping in the stock market, and I'm going to go buy a lot of those same tech stocks that I bought that got hammered this week. I'm going to go buy more and more and more of those shares because I actually believe what Powell is saying. I do believe that inflation is going to be under control, and I think it's going to be okay. But just in case we're both wrong, that's why you diversify. Always prepare for when you might be wrong. All right, so I'm out of here, guys. Have a good day. Let me put on my mask. I'm walking the grocery store. Hit the thumbs up button, share, subscribe button. Also, you can join us in the blackstockmarketprogram.com. We have class every Tuesday, and that's when you can ask me questions, and there's a whole curriculum, and it's really good, and the first month is free. So if you want to learn more about stocks and you want to get good at this stuff, go to the blackstockmarketprogram.com. I'll see you guys soon. Have a good day. Talk to you later. Peace.